What is VAT? Okay, VAT stands for value added tax. Value added tax. It is a consumption tax levied on goods and services. Goods and services based upon the, what is the meaning of consumption? End user consumption. Okay, so that means I purchased something and not used. I can't claim. One more slide. You can't claim. Consumption means I purchased and not used. So it's a value added tax. Why the name is like this? Okay, what indicating its value added means it's a chain VAT, chain tax, right? So B2B and B2C. Okay, in this also there are a lot of provisions are there. If someone came from other country as a visitor, he purchased, he will pay VAT, but when he is going home, he can collect VAT. That's also we need to understand. As an accountant, when the visitor will come, what is the procedure? That is a part of our course. Okay. So in that case, there are different transactions are there. We will learn what is the procedure and how to book that invoice. Okay, we'll see the practical scenario. So now it is on a consumption basis and collected at each stage of supply chain. Supply chain. For example, company A is a manufacturer. Okay, purchase VAT goods with the 10,000. On that there is a 500 is the VAT, and he sold to company B. Company B for 20,000. He added his margin. 10,000 he purchased. He sold for 20,000. Means he collected VAT 1,000. Sold. And he paid only 500. Okay. So he collected 1,000 and he paid 500. Balance he need to pay to the government. Right. Again that second company B, he sold to company C by adding 10,000 for 30,000. And the 5% VAT means 1,500. Right. See, the value of the product is increasing. When company C will sell to the end user, maybe they will add their 10,000, 40,000, means 2,000 VAT, 10,000 item gone to 12,000 because of that. That's why in the market you can see factory outlet, direct sale from the factory. That means there is no movement of goods from B to B. Direct they are selling. Right? End user will pay only 500 VAT first transaction. Right. This is what we need to understand. Okay. That's why the value addition. And every moment of transaction from one company to another company, they are adding their markup, the profit value on that 5% charging only on the profit portion. So value is added, you need to pay. So first stage, company A 500 to the VAT. FTA they paid. In the second stage, company B, they purchased for 20,000, right? Again, they added how much? 10,000. Again, they will pay 500. To whom? To the FTA. End of the 2,000 VAT, who paid generally? Consumer paid. Okay, that's why the name of the VAT stands for value added tax. So everywhere where the value is added, 5% is applicable. Well, next, the question is, now the company is unregistered. Company A registered, company B not registered, company B sell to consumer. The scenario changed. The total burden on company B itself, because he cannot collect VAT from the end user. Okay. So what is the treatment in that case? Okay. And what corporate tax is saying and related to this point is what we need to understand practically. So what IFRS is saying, is there any restriction that you cannot debit to P&L as per IFRS? No, right? You can debit any amount to the P&L. As per accounting, you got an invoice, paid, paid. Then what loss will come and we'll check. Okay, what law is saying? It's permitted to claim input or no. Right? What corporate tax is saying? Can we debit to the P&L or no? If not, we need to have a treatment of add back or deduct. Okay. So now this is what we are trying to understand, because mashallah all are having a practical experience, means you know accounts. Okay. So we will discuss only on the real scenario of FTA transactions. Means what is the impact, what is the errors, how to rectify, how to file. Everyone knows how to file the return, the basic level. But we'll take this at a higher level. We should not go at a basic level because all our accountants having 5 years, 6 years, 2 years experience. So mashallah. Now